and just how much of that impact are you feeling in your pocket? That we shall be having that conversation with panelists, including Pauline Mwangi, the director at Ronald's LLP, as well as David Kingo, an economic analyst who shall be joining us a little bit later. We shall also have a conversation about the poultry value chain. If you have noticed, the price of eggs has been skyrocketing in the past few weeks. What does that mean and how can that be brought down? We shall be talking about that with Dr. Humphrey Mbugwa, a member of the Kenya Poultry and Breeder Association. Welcome to the show. Let's get started with that conversation on the economic survey. And in studio with me already is Pauline Mwangi, the director at Ronald's LLP. And Pauline, welcome to Set and thank you for joining us.
Thank you very much.
Karibu sana. Now, just to start us off, that 7.5% growth in 2021, what does that mean?
First of all, I think that you'll need to look at it like Kenya is not an island. We're in the global, we are a country in the world.
Yes. So
we need to evaluate ourselves based on how globally we have fast moved. And globally we can say that despite the challenges of COVID, despite the many economic challenges every other country is having as a result of COVID, the world GDP has also grown by 5.9%. So when we narrow down to Kenya, we remember Kenya is an emerging market, meaning that we are at a point our potential for growth is higher than the normal countries who some have developed already, some have not developed. So that means when we evaluate that, we are able to a bit absorb the shock of things like inflation better because we are emerging, we are at a growth stage as a country. So with that, actually Kenya's GDP has grown by 7.5%, and in this case the major contribution to that growth is actually infrastructure. We can see a lot of infrastructure projects in our country, which when you look at it, I know the question people ask is, okay, they're saying that Kenya's GDP or the economy has grown by 7.5%. Where is it to the normal mwananchi? Yes. I think that's the biggest question. Where is it to the normal mwananchi? And it will come, you know, it might not be directly, you know, but it is there because we're looking at the big picture.
Let's just set the stage for this 7.5%. I mean, we are coming from a contraction of 0.3% in 2020, when our economy was battered by COVID-19.
Yes.
From that report, the education sector grew 214%. I mean, it was at zero, you know, it was growing at zero. It was shut down in 2020.
Yes, exactly.
Accommodation and food services, the hospitality sector also contributed about 52.5%. From a negative 47.7% in 2020. Yes. Of course, that is big. That means that this growth of 2021 was largely contributed to by sectors which were recovering from COVID-19, yeah?
Exactly, exactly. That is true. And also, the economic survey has also helped us to see where can we go back. When can we go, at what point do we go back to pre-COVID? Because we want to now stop saying about everything is about COVID. We want to say that are we now on the right track? Because remember, we have agendas like Vision 2030. We want to achieve that. But then we have had a big bump with COVID. So we want to look at it. Where will we go? For example, Kenya is predicted that we will recover in 2023 pre-COVID, so that we go to pre-COVID levels. So we stop saying issues of everything is COVID, and you see that's where we are seeing a big change because we went really minus. Now we're coming back. Yeah.
Let's just answer that question first for Kenyans to understand how there is a 7.5% growth, but the pockets don't feel like, you know, there is growth. It's like the pockets are torn. What goes into the economic survey? What is looked at, you know, for them to get these numbers?
Okay, we look when they get to that number, they look at the what can I, if I put it in layman language, you're looking at everything you have. The GDP, the gross domestic product, basically as a country, when we count our wealth, our investments, our in terms of everything that we have, it's like you as a household, you say I was worth 2 million shillings. If I count my cows, I count my car, I count my house, I have 2 million shillings. You go to the next year and say, how much do I have? Has it increased or has it gone down? So we are looking at everything the country has, and we are seeing that it has grown by 7.5%. And it has grown because there are initiatives that are actually growing the economy. Initiatives such as the Buy Kenya, Build Kenya for manufacturing. Manufacturing has seen a growth because of that. This is an agenda that was a strategy that was put in place in 2017 that we are actually realizing it now. We're realizing it in the form of the strategy is to ensure that our manufacturing our product we can export, but also we take our local products, and also the government giving incentives to manufacturing firms to ensure that raw materials are readily available. They are sourced locally. When they are sourced locally, then they are cheap. So first, there's always this notion that made in Kenya is very expensive. We want to change that. That strategy is actually to change that the way you'd want to wear Gucci, you'd want to wear something made in Kenya. So locally, materials, and also the same, can we export this? Are there incentives to export this? So that has been happening. There have been incentives to just ensure that the Build Kenya, Buy Kenya, Build Kenya is actually being realized.
While we are at the manufacturing bit of it, manufacturing contributed or grew by 6.9% last year. And you said that we should get to a point where we want to maybe wear clothes made in Kenya the same way we want to wear clothes made outside. But one of the issues that is impacting the manufacturing sector in Kenya is the production cost. The production cost is really high. That ends up making Kenyan-made goods quite uncompetitive compared to even goods made regionally. Eggs from Uganda are cheaper than eggs produced here in Kenya. So is the government really true to its word?
In the bigger picture, it is, and the issue is that they just try to ensure that they can supplement where we are falling short, because it's also a growth. You see, sometimes you have to struggle when it's just like a new business. You struggle a bit when you're starting, but in the end picture, the overall picture, and we have seen a growth in manufacturing. We are looking at it. We have seen a growth in overall from a GDP perspective. The contribution of manufacturing has actually grown in the last year compared to 2020. So it is giving incentives for manufacturing and giving incentives to local manufactured raw products. To the raw products especially,
to ensure that we are, value adding here in Kenya and just exporting finished products. Our value of trade, or rather our trade deficit, is still high. So that is one sector that can definitely support us. Another sector that saw quite some growth is the financial and insurance activities at 12.5%. Now, on that front, allow me to bring in the numbers about the savings and credit. Kenya, the use of savings last year increased to 74% from 69.9% in 2019. Kenya's saving rate is at 12%, which is low. The uptake of credit rose from 50.4% to 60.8%. These numbers ideally say that Kenyans were borrowing to either survive or to at least have some decent kind of life, now that things were very expensive or unavailable. What are your thoughts on that?
I think in 2020, as we say, things were very slow. Things were very slow. People were sort of locked up. There were no much activities. And even the people who had savings, they held them. You don't know. You're afraid what is happening. If I have savings somewhere, I will not invest. It was not the time for even investing. I will wait to see first how are we dealing with COVID issues. Then in 2021, things started opening up. Things started opening up. People had brilliant ideas in terms of just even even business ideas. We can see a lot of self-employment SMEs, the smaller and even medium enterprises have really rose from the period 2020 to 2021. And it's because now the economy is opening up. The restrictions were lifted, like we didn't have, we could try to go back to normal as much as we have not reached there 100%. And with that trying to go back to normal is where people said, I can do this, I can invest, I can borrow money to do a business based on an idea that I've gotten through COVID. But also there's some people sadly who also went down, who went down. They lost their jobs, and sometimes it comes as a blessing in disguise, in that somebody maybe lost their job. But I've had so many success stories of people saying, I lost my job, but I opened a something, something I've always wanted to do. I don't have the finance. Where do I go?
Yeah.
I go and ask for credit. So there's been a lot of that also. Yeah.
So we are hoping that, do we hope that these numbers go up or down?
These numbers that we are going up because we want to go back to pre-COVID, and we want to attain Vision 2030. So for me, even when I was listening to the minister, the CS, when he was reading this, he's very optimistic. Regardless of the inflation we have, the fuel engine, the fuel pump prices going up,
yes.
We believe that we are positive. It's going to get better.
Yeah. Transport and storage, it grew by 7.2%.
Yes.
Kenyan households, however, did not really feel that growth because the transport index recorded a 12.3% inflation rate. It means Kenyans were paying more to either transport goods or, just move from one place to another.
Yeah.
And the situation is not really getting any better because of the increased fuel prices. And yes, there is some, the large bit of it is international pressure,
yes.
coming from outside. But also there is some contribution that the government or the Kenyan setup does have, with the taxes and all that. So how do you see the transport issue playing out?
I think it's a give and take in transport. First of all, infrastructure is for transport, like the
Most
connectivity, the income, and what is invested in building the roads, building the railway, it goes into how can we reach the remote areas. We don't want areas where people are saying we are not Kenyans because you cannot reach there, or it takes you like 4 or 5 days, where a place maybe you could take 1 day to go. So with the opening up of connectivity all around Kenya, I believe that actually transport will increase because goods and commodities will reach any other area that is due to reach. Yes.
Right. We are talking about the economic survey that was released last week. It gave quite some numbers about the Kenyan economy. And Pauline, one of the very important numbers here is the agriculture sector,
Yes.
that contracted to about 0.1% from 5.2% in 2020. Agriculture is really the one backing Kenya's economy. What does this mean?
Yeah, now you see, agriculture, our backbone as Kenya, and the backbone of our economy is from agriculture, and the unpredictability and the reliance on the rainfall has always messed us up.
Yes.
Like it has always been, oh, this season was not good, this season was not good. But we are seeing the government coming up to just promote this by promoting irrigation schemes. Can farmers, and there's been even loans given to farmers, buy manure and everything. We always say that. But also the bigger picture is just can we have a sustainable solution that if rain does not come or we don't get enough rainfall, what can we do? So irrigation schemes are coming up to just ensure that we are stabilized. We stabilize this, and that our main source of funding or our main source of financing for our GDP is not affected. Yeah.
I mean, in agriculture, there are very many factors to look at. There is the issue of the shrinking land size,
Yes.
and also the productivity per acre, so to say. I mean, in developed economies, you get that their productivity is maybe even 4 or 5 times higher than ours. I am wondering what could go into that process to ensure that we get to those levels.
I think, in my view, we should capitalize on the land, because now of the shrinking land that you're saying, on the fertile, you know. First, we should put restriction of inhabiting fertile land. That is one thing I believe we should do. But also, we should take advantage of land that is unused, that is, if not even is not on its own, is not productive. Because we have like the north. If you look at northern eastern, I believe that the area can be agriculturable, in that we can look for ways, and with technology in this day and age, I believe anything is possible. We can look for a way that can we get land there and capitalize it. The other thing that I always joke to my friends, I think I believe in, we should also try to, I know we have gone county-wise, but then Nairobi is still the capital city, and we try to grow Nairobi and Nairobi area around, which in real sense, when you look at, if agriculture is our backbone, this area is very fertile. Can we decapitalize Nairobi? Can we have just the way we've seen Tanzania and we've seen Nigeria, they have decapitalized the initial capital city just because of other reasons. For us, it would be, can we go to, let's say, can we take this capital city to Isiolo? Can we take to Turkana? You know, we grow that area as we are trying to minimize everybody trying to come to the capital and just taking up land here. Yeah.
It's interesting what the South Africans did. I mean, the judicial capital is on one end, the legislative and the executive. That way, even services can grow in between cities. Yeah, I mean, that's a very good suggestion.
Yeah.
One of the things that supports Kenya's economy is that it's diversified, and the services industry has really supported Kenya's economy. But of course, the impact of that in 2020, messed things up. So much as the agriculture is the backbone of Kenya's economy, is there any way that we can diversify even more?
We can, and we are on the right track, I believe, as a country. When we look at tourism as one of the services, you know, tourism was really affected by COVID because all the hotels closed. But the government came in through TFC, which is now part of Kenya Development Corporation, got a government injection of 2 billion to just help these hotels come back. So one of the ways we can grow is just what do we start? We start from what do we have first? What are the resources that we have? We start with those ones, and then we maximize on them. We make sure that we get the best rate of investment, return on investment. We maximize on that. But then we are seeing SMEs. SMEs are a major game changer in our economies, because first of all, employment, we can see even in the survey, employment increased by around, I think, 6.1%. Well, this number people might really dispute it, because the mentality is that employment should be in the formal sector. But when you look at it overall, with construction, employment has really given a lot of the infrastructure perspective has really given a lot of youths our jobs. Well, they might see it as kibarua, but I believe we should always have the bigger picture. We should always have the bigger picture. So we will grow, and we are growing.
You believe that we are growing?
I do believe that.
Okay, when you mentioned infrastructure, the government has been pumping quite some amount of money there. And even, I mean, the expressway is set to open in a few weeks' time.
Yes.
So it means, and you're saying that the impact of these infrastructure projects will be felt in time. Could you just make that real for Kenyans? I mean, they see all this money going into infrastructure projects, but many people are sleeping without food, you know.
Yes.
Many, even if the growth is, say, 6% in employment, many are still jobless.
Yes.
And the education sector is also pumping in more graduates every year. And the joblessness or unemployment rate is still going high. So just, I don't know, make sense for Kenyans out of this.
Okay, the way I would say, look at it this way. Yes, and I know at some point you will come to the public debt issue, because it's very related to the infrastructure.
Yes.
We have borrowed to do a good thing. You know, in finance we say there's good debt and there's bad debt. In this case, I would say this is a good debt if obviously governance and accountability is met. That's the condition, I would say. But we have made an investment in our country to reduce the traffic jams, for example, through the infrastructure in the city. We have made an investment in infrastructure to reach to places, you know. That means you will not have a problem wherever you are in Kenya. If you, for example, because I will relate this to SMEs, if you have an idea, and the government is really supporting SMEs. As an SME right now, you go to the bank, it is very difficult to be denied credit, you know, provided your SME, your ideas and your innovations are feasible. And which is, I think, the place we need to go for employment and to reduce poverty in Kenya. We have to take it like on a personal level. This mentality of Serikali's idea might not work. It has not worked for the last I don't know how many years. But
isn't the government supposed to create an environment that enables, you know, growth of even SMEs?
It is supposed, and it is doing that through the availability of funding. You know, when we talk about infrastructure, that means you as an SME can set up anywhere. You know, you can set up anywhere, and your products. Right now, people are doing a lot of online trading. Wherever you are, just tell me where you are. I'll send the product to you. You know, if it's a service, people are doing remote services. You know, this is only possible through infrastructure, IT infrastructure, the physical road networking. You know, that is the only way we are able to do that. So it is doing for the SMEs, and that comes back to employment. The government is trying to just catalyze these things called SMEs, get funding. You know, training. The even NGOs coming up in training SMEs to just ensure that they do it right from the start. We don't want then SMEs to be an S. We want an S to be an M to be an L. Yes, you know, a small to a medium to a large. You know, so we don't want them to die at S. And it starts at S. Look at companies like Twiga Foods. You know, it's a very good example of how an SME just started without even an office. They were listing an office space. You see, their success story. So we want more of Twigas to go from S to M to L.
But the numbers show that this is really not happening much. Yes, there are outliers like Twiga and all that, but 70%, strongly over 70% of SMEs die within the first 3 years of you know, opening up. So is there anything that can be done to increase the survival rates for these SMEs?
Yeah, I think long-term financial planning, you know, in that they need to just, you know, sometimes SMEs start to just to solve a short-term problem, you know, in that somebody is struggling financially, you just start something but then they have to really have the bigger picture. Look at it long-term, do the planning long-term. And also what SMEs are told, you see, when they start making money, they start banking it very early. For large organizations, you have to like wait a bit, just reinvest in the business. I think that's one of the lessons we would say they need to learn.
And continuous learning.
Yes, and continuous learning.
That is very important. You mentioned how Kenya's tech infrastructure, IT infrastructure, has really supported Kenya's growth. And of course, just the other day, you know, Google is setting up here, Microsoft is setting up here. Kenya is technically the hub of the tech industry in Africa, or Eastern Africa, just so to say.
Yes.
So what is the future of Kenya's economy in terms of now tech support, like technology supporting Kenya's economy?
Okay. Oh, I think we're doing marvelous work in tech support. There's a survey, or there's a short list that was done, the highest, the best performing SMEs in tech in Africa. Number 1 and 2 were actually Kenya. I think SocoNet was number 1.
Sandy was also there.
Yes, Sandy, yes. Number 1 and 2 in Africa. You can imagine if we are producing number 1 and 2 in Africa, out of the top 10 lists, out of 100 lists, I'm sure we are penetrating that market very well. And this is something that even investors VCs are saying when they come to Kenya. They're like, this is a hub. You know, we are an emerging market. In East Africa, we are the people who we can talk, for lack of a better word, I believe so. So tech, I think we are very advanced. We are growing, and it is a big contribution to even us growing as an economy. Yes.
Could that be the answer to the high unemployment rate in Kenya?
It is one of the answers, because a lot of people are getting employment, from tech. I think tech right now is the #1 employer of even graduates and everything. We have Google set up in Kenya. We have Microsoft. We have the likes of Andela who is just promoting coders. And promoting young people who are very fresh from school to think in a business mind way in terms of coding. It's no longer just about I can code. It's what can you code? Yeah. So it is.
And just the other day, the coding syllabus was, approved by KICD.
Exactly.
So definitely we are in the right direction.
We are in the right direction.
Yes, we are having a conversation about Kenya's economy with a focus on the 2022 economic survey that released the numbers on how Kenya's economy performed in 2021, with the economy growing by 7.5%. Teresa Mutai was covering that particular release. Let's listen into what she had for us.
COVID-19 restrictions pushed to contract 0.3% in 2020, the first contraction in nearly 3 decades. However, the lifting of the restrictions and gradual reopening up of countries lifted economic activities, with Kenya rebounding to register a growth rate of 7.5%. This was driven by growth in sectors such as education at 214%, accommodation and food services at 52.5%, financial and insurance at 12.5%, while manufacturing rebound from a contraction of 0.4% in 2020 to 6.9%.
Overall, the country's economic performance for the year 2021 expanded by 7.5% compared to a decline of 0.3% in 2020.
Agriculture, which is the backbone of Kenya's economy, contracted 0.1% compared to a growth of 5.2% in 2020 due to poor and erratic rains.
It may be noted that the agricultural sector recorded a mixed performance, recording a contraction of 0.1% in 2021 compared to a more impressive growth of 5.2% in the year 2020. When all sectors failed to show any signs of growth, agriculture stood out with a growth of 5.2% 2020.
The value of trade increased by 26.3% to 2.9 trillion shillings. The value of exports rose to 743.7 billion shillings from 643.7 billion shillings during the previous year, with agriculture dominating the exports. On the other hand, the value of imports increased to 2.1 trillion shillings from 1.6 trillion shillings in 2020, with balance of trade widening 40% to 1.4 trillion shillings.
To continue accessing the international markets, noting that the number of reduced flights in and out of the country at that time, because when in and out flights were reduced, the challenges of the air freight was a big problem, and the government came in, gave subsidy, gave incentives, and as a result of this, they were kept afloat. These interventions were aimed at supporting the sustenance of our farming and communities by providing continued gainful employment for thousands of workers in the sector.
Even though Yatani expects the economy to continue growing, he says the growth is unlikely to match the 2021 figure due to rising inflation, higher fuel prices, and a weaker shilling.
Well, that was Teresa Mutai with that report from the Treasury that was releasing the economic survey of 2022. Kuriatani there just giving those numbers and the outlook for this year, including the fact that there was some growth in Q1, quarter one of 2022. and the cost of living or rather inflation, is likely to rise in Q2 and 3 based on rising energy prices. We are discussing those numbers and much more from the 2022 Economic Survey here on KBC Channel 1. This is BIZ Check. We take a quick break. When we come back, the conversation continues. Stay with us. Many thanks for staying with KBC Channel 1. You are watching BIZ Check and my name is Betty Kiptum. Now we are having a conversation about the numbers in the 2022 Economic Survey and what they mean for you. I have been speaking with Pauline Mwangi, the director of Ronald's LLP, and joining us now is David Kingo, an economic analyst. Welcome, David.
Thanks a lot for the opportunity.
Karibu sana. Just give us your thoughts on the numbers, 7.5%, and the sectors that supported that particular growth and maybe the sectors that contracted, like the agriculture sector.
Once more, thanks a lot for the opportunity. My view would be that I think we've seen 7.something% economic growth during Kibaki regime, and then we could tell the impact compared to what we are facing today. The conversation is we've done with an economic growth that's similar to what happened at Kibaki. Where is the impact? Can the local people feel that particular change? So what is that we felt when 7.something% economic growth was realized of the Kibaki regime, and the difference between when 7.something% is realized at this particular regime? What is that particular difference? That's my take. Then the other issue, economic growth, is about numbers and which sectors are pushing this particular economic growth, and to what extent are they aggregated in the economy. For example, what you see, they're trying to say around 200-something% of the economic growth is supported by education. What that doesn't mean, because you've given free education, so it is assumed that the money that you could have paid fees, you've turned it to a different economic activity. It has helped you in other aspects of life. Yet the people whose kids are being paid school for, they don't have any increase in their economic life. So the income pattern is not changing by the virtue that you've taken this particular kid to the school on their behalf. So having that particular 200-something% given by education, because it tells much about it. The other sector that I see they're trying to say has brought the positive impact about manufacturing. But you look at the level, the number of people that have direct benefit from manufacturing, how many are they? They're quite small. Because manufacturing is automated nowadays. I value transaction, but the number of people involved, there are quite a few. It is not like old version whereby for you to have that particular impact on an economic growth, then you will have employed so many people that the multiplier effect will be very positive. So in terms of manufacturing, it is the amount of profit that has been announced by these particular manufacturing companies, not the number of people that have been employed. That's how you can feel the difference. The other aspect I've seen that's about insurance and financial services, about 12.5%. What that one mean? We've come from a period, or we usually say when you try to get deep, we usually say risk is unitized. So local people are not able to borrow as much as they could because the banks has focused on corporates, on people who have perhaps employed because of the security of this particular product, because interest is already determined by the government. So how many people have benefited from this particular impact? And that's why I want to take you back. When you compare both regimes, the former one and this one, when you talk about 12.5% economic impact given by financial services, how many people that were unbanked that time went to banking? So many of them. The sphere has kept on reducing. So that one tells you a lot about the differences. So the aggregate benefit of everybody in this economy as an issue, we have grown, but the individuals who are feeling the impact are quite few.
It's quite some interesting thoughts that you brought up there, Pauline. Do you? I wouldn't think that you agree based on what we had talked about. Do you have anything to say about what David has said?
Well, I don't dispute what he's saying. I just think sometimes it's, first of all, economists will always look at things a bit different, which we appreciate, which we really appreciate, because you need to look at both sides of the coin, But on an overall, I think when they're talking about the GDP, they're talking about the overall picture for me. For me, that's how I would interpret it. As an emerging economy, I think the feel will be a bit different. Would be a bit different in that we would not directly get the growth immediately. They'll be absorbed. It's like having a car that doesn't really shock absorbers that are very good, so when you go to a bump you really feel them. So individually we really feel them, but on an overall perspective, I would say the initiatives have a helping to just make sure that growth is consistent. And at this point, we're moving from a point of COVID. Can we stop saying now we are not growing or we are growing, not based on COVID, based on other factors, because we were recovering from COVID.
Right, we were recovering from COVID.
Yes.
David, what are your thoughts on just making sure that when these numbers are growing, on the overall picture, 7.5%, how can the government work on it such that it translates to how people feel?
I think we usually say economic growth should be sustained and increasing. And even all these things are based on the Vision 2030, where we said we want to move to a double-digit economy. Double-digit means from 10, 11, 12%, that trend. So because the economy has changed the way things are done in the current world. So the impact need to be analyzed critically and see how many people or how much is this project that we are doing, how much is this model that we are doing able to push everybody in the village in this country. I think that's a concept, and what we're saying, and my friend has echoed here, in the short run, we will have these imbalances. The economy is growing and I'm not feeling in the short run. But in the long run, if they are sustained the next 5 years, we can be at 8% and have a much bigger impact to everybody in this economy compared to 7%. Or even 6% in the next 5 years, but the impact will be very big. Because what we usually say, we are in the preconditions for takeoff stage as an economy. When a plane is about to take off, then it has to shake a bit. So we look into our stability when we are in the maturity level, when the plane is up there and stable. I think they call it automation, auto mode, I don't know. But that stability is what we talk about in the long run. But in the short run, we must shake a bit. Yes.
So this is pretty normal.
Exactly.
All right. We were talking about the infrastructure bit of it, and just how the government has pumped quite a lot of money into it. And even, well, we mentioned the expressway that's about to be opened. And Pauline was saying that these are part of the things that will, that are preparing us for takeoff. Yeah? Do you agree?
Yes, of course, yes. And the same sentiment that the impact will not be in the short run, it will come in the long run. Then they have a big multiplier effect. I had a conversation we talk about hospitality, tourism. We are not able to get as much tourists as possible. Our air industry is collapsing. So when we have a city with such nature of roads, when we have an economy with such nature of roads, it attracts foreign direct investors who will come and want to invest in this country. I think we also need to understand economics is sometimes about perception. You go to an old Nairobi city. How many people will be interested to come and invest in Nairobi? Very few. But when they hear about Nairobi, they see photos, our international marketing strategy, see how our town has grown. And then this is Kenya. They are not told that we have other towns that are not developed. So they will think that every town is like these expressways. So of course people will come, and then we'll have the impact later. So by the virtue of that road, someone is able to see a photo in a certain the Asia or Europe country, and they're able to come and establish a company in this country. So that is the impact we talk about in the long run. But the short run is going to be quite bumpy.
Pauline, do you think we are doing a good job at packaging ourselves?
Oh, I think we are.
Yeah?
Believe you me, we are. You know, sometimes we think we're not until, for example, you go somewhere else and say, oh my God, this is Kenya. This is you even feel proud, you know. So I think like the Balala's team, the one for Magical Kenya, has done a fantastic job in just putting Kenya out there in terms of tourism. But now we can say we're not just going out there in terms of only tourism. We're going in terms of new business ideas, innovations, the tech companies that are being actually started, and the innovation starts from Kenya. So we are being heard and we are being seen, which is very important, and not in just a bad way. Yes. And we are praying for peaceful elections. We don't want the issues that come, the negative issues that come with elections, to wipe people's minds of how positive Kenya is. Yes.
We'll talk about the election factor in terms of Kenya's economy this year. But first, let's talk about the public debt issue. Kenya's public debt has been growing exponentially, especially during this regime. And the World Bank, you know, keeps saying that it is sustainable. Is it sustainable? Let's start from an economic perspective, David.
I think it is still sustainable because, of course, we say the nature of projects that go into this from this funding, the multiplier effect, which I say that it's not very, very immediate. So, for example, I just say this: if the Thika superhighway, money, for example, was borrowed and then it was supposed to be paid after, this is which year after the road was done? That's around 15 years there. So if the tax collected by the business created through the superhighway are supposed to pay the loan that was used to build that particular road, of course it will be easier, the money is there and it can be paid. So the only unfortunate thing is we borrow, then we start paying when you are still in the construction process of these particular projects. So if a project has a construction lifespan of around 3 years, the lender will not tell you, start paying me after 3 years. They will want to start getting installments before even you complete, before that particular infrastructure generates new business, generate new avenues for taxation to increase our tax collection, then they are able to be paid. That is the mismatch we call the short run. But anyway, these roads were overdue. This infrastructure is overdue. If we prudent utilization of this money that we borrow, then in the next 10 years, people will see the difference. And that's why we say a kid who will come 10 years from now will never understand that Thika Road was one single lane. They will never want to understand and imagine how were all these cars able to pass in this particular road. That is what we are saying. So in the short run, it's going to be difficult. But the next few years, of course, then things will be positive.
Yes. Pauline, your thoughts on public debt? So,
first of all, we are currently at around 8.2 trillion, which is around 68% of our GDP. Well, this it's how you look at it. There are countries who, like for example, Japan, whose debt to GDP is actually 100, so it's 1 to 1. So you will find it is not a bad thing to actually have debt. And as I said earlier, it's about, is it a good debt or a bad debt? Issues of governance, issues of accountability, strong financial management policies are what now you're able to distinguish, is this a good debt or a bad debt? The intention is that the debt is to spearhead the country, you know, to line it up. We can compete with other countries in terms of our growth and our manufacturing, all other industries, because that is the purpose of the debt. It's to reignite or to support the country to grow, to be another level. Almost 50% of this, I think 57% of this debt is external borrowing. So there's also that aspect of internal borrowing where it is mostly held by commercial banks. There are few individuals who yes, they have invested, but that's a very small number. But mostly it's with the commercial banks. And now when people are talking about debt and the concerns about debt is mostly the foreign debt. You always people saying, oh, we are becoming a slave of China, you know, things like that. For me, I look at it, are we using this debt the right way? Are there financial management systems to ensure that the accountability of all this debt, so that even when we are repaying this debt, we're repaying for something we can see? Well, can we see it? Yes, we can see it. Are there investments that we see and we are not able to match how much was used? As for example, the SGR, there are some of that. So what, personally as a citizen, as a Wanjiko on this perspective, I would urge the government, we are not saying don't take the debt. If you have analyzed and saying that actually taking debt is where we will grow as a country, take debt, but take it with the right intentions and use it in the right intentions. And there's some initiatives where we can see the government is trying to really push themselves to be accountable. For example, the rationalization of expenditure. In the past, we used to even take debt to pay recurrent expenditure, which is, it's like you taking a debt to eat, you know, basically to eat. But a debt should be something to move you to the next stage. So there's been that rationalization. We can see there's been an appointment in Treasury. There's an office for internal for independent. It's called an independent debt management office, where they want to see how can we just ensure there's a balance. There's a balance, and any debt that we take is actually prudently used for the growth, more of the development and not the recurrent. Yes. Yeah,
very important pointers there. When Yatani was releasing the budget, when he was reading the budget statement in April, he fronted the suggestion that Kenya's debt to GDP should be kept at 50% and below, and you know, let's do away with the debt ceiling. Let's just keep it at 50% and below. David, do you think this is the right direction, and is it achievable from 68% to 50%?
I think what happens with this borrowing, it is determined by market forces. And when I talk about market forces, it is the demand, that how many projects you want to do, and then what is the cost. That is what pushes these people to give it a percent. Because when they cap it on a certain value, of course, because more projects are demanded, we cannot borrow above that. So they keep it within that particular range. I think what concerns most, we usually call it debt service to revenue. How much are we collecting? And how, from that much we are collecting, how much goes to debt? So external debt is around 38% of what we collect. Even forget about the GDP, the structure of the economy. We have collected tax and everything, revenue, this particular much. So how much of that is going to pay debt? So if they keep on reducing that particular percentage, let them open to what extent they can borrow for against the GDP, but we lock. What is that percentage of revenue that cannot be used to pay debt? We cannot collect 100%, for example, then we pay debt 70%. So we have 30% to pump back the economy. So however big the GDP is, however big the economy is, of course not be sustainable. So that is the aspect, that underlying factor that the Treasury keeps on checking. Then I think the Parliament should pass a bill that what percentage of external debt should be our revenue. How much are we collecting is being used to pay the debt. That way, when you lock that one, of course, now you control how much they're able to borrow against the GDP. I think that's where it is critical, because we need to see the impact of other projects that have been completed. Of course, we did not start all these projects at once. So we expect the ones that have completed already to have an impact to the economy. We need to see extra revenue to the economy. That's why the revenue should be growing. Then the percentage of debt that we're paying from that revenue should be reducing over time. That is the aspect that we need to look at.
Right.
Yes.
Even as we look at that, I mean, it's so sad that the head of state himself admitted that 2 billion shillings is lost every day to corruption. And when you think about 2 billion shillings every day, probably that is 62 billion every month. Just how much that could do for the Kenyan economy, for the Kenyan people. So that means corruption is one place that Kenya needs to rein in on. Do you agree, Pauline?
Yeah, definitely. Our biggest challenge as a country right now, I believe, is corruption, because people have very good, we are very innovative, I believe so. We're very ambitious. We're very also ambitious. We want to get there. But then we just get lost on the way with corruption, because sometimes we even have this plan, we're going to do it, but then just this thing called corruption, which we just need to deal with. We just need to deal with it from even a financial, because corruption is so, it causes economic and social injustices. where money was supposed to go doesn't go. What projects were supposed to be done at a value, the value for money is not achieved. So corruption is basically something we are dealing with, and we are praying that this thing is something that we just need to deal with, and it's through governance. It all comes back to governance. Where now, as even people are going to the polls this year, it's something, look at yourself and your life. Is there something you would want have or would want have to do or would have done, but then a corruption somewhere was a hindrance? You will definitely have some places you will take yes. Yes.
And of course the power is in the hands of Kenyans to some extent, yeah?
It is. Not to some extent.
In its entirety.
Yes, in its entirety. We choose our governance. So, yeah.
Yeah, David, I see you nodding your head in agreement, yeah?
Yes, of course, we've heard about corruption and people want to fight corruption. But I don't know where it stops, but it stops somewhere. So that's what we don't know. Because we started on high note. These government entities, very strong, DCI, Director of Public Prosecution, Judiciary, EACC, also on high note to fight corruption. But I don't know really where they stop. I think they need to tell us what happened. That is something we don't know, maybe. But I hope they are fighting. We've seen cases in court successful. We've seen assets being frozen, be recovered back to the government. And when you look to the EACC website, of course, you see how much they're able to recover. Because corruption fights back and it's quite complex, and it takes time to nail this person and say, this is the value of wealth that this person has stolen from the public. That's why it takes that particular process. But kudos to the institution. They've been able to fight. What they have done, we need to congratulate them. I think what they may not be doing is to publicize. But if you're interested in seeing what they have done, of course, you can look at the website and say, exactly, this is the much we've been able to recover. And it is quite positive. So we want to encourage them to keep on pushing, because corruption is quite dangerous for this country. Yes.
And as we've just said, that Kenyans have the power in their hands. I mean, we are headed to the electioneering period. Just what do you anticipate will be the impact of the electioneering period on the economy? I'll start with you, Pauline.
Well, we would first want to see a change. That is something we would want to see. We would want to, I would say, I personally would look up to the next president to have agendas of the economy at the first forefront, because when you look at an economy, you're able to deal with so many things. As I said, social injustices, economic injustices, the rate of unemployment, So the next incoming president has a lot of work to do. He has a lot of work to do in perception and in reality. Because you see, also you might be doing something and people don't know. So you have to make sure also people are knowing what you're doing to appreciate you, and actually to buy into your dream as a president. So all the best to the new president. We will pray for him.
We will pray for him. David, do you think that the next president will be receiving a poisoned chalice?
Of course, yes, but not as much, because currently we've already seen the the excitement in politics. I think we've experienced all that we expect to experience after election, because in the last 1 month and towards even announcement of running mate, people have argued enough. So we not argue anymore, and we can all tell the chances of what will happen next and who will be where. So basically, that way we'll reduce the post-election conflict that might affect the economy. But we hope for the best, because the statesmen that are in this particular race, I've seen this country when it is positive, and I've seen this country when it is negative. They know when to stop, and they know when to quit, and when to call peace. Yes.
How about the investor confidence during this period?
Of course, the investor confidence will be a bit shaky, but because we had an experience of past worse times, of course, future periods can be better. And we've not seen the aggressiveness that can take us to the wrong side. But of course, the investors have to reduce this particular time, and of course it happens everywhere. They have to strategically reduce, but when the election is successful and we have a very positive transition, of course they'll come back. But it's expected in the economy that this particular time it must go down.
Yes. To go down. Yes, Pauline, do you have something to add to that?
As in, you see, for investors, they're now watching us. You know, any move we make right now as a country, they're really they're with their binoculars right now, just checking and seeing, and obviously they also have a predetermined way of how they would want to see as an investor. So we need to be on our best behavior, not just for the investors, for ourselves as well, to just make sure that this period is not too disruptive. It's just a short period. We can just have elections within the month of August, and September with the swearing in and everything, we can just go back to the norm, you know, to just work for our economy immediately after. We need to recover from the elections immediately. So we hope we don't see the disruptions that come with elections that we have seen in the past, sadly.
Right. Let's really hope that things just go smoothly and there's a peaceful transition for the sake of the economy and the people of Kenya. Well, one of the other things that is going to impact the growth of the economy in the near future, Q2 and Q3, was the energy prices, the rising energy prices. And there's the issue that, you know, the Ukraine and Russia war, the imbalance that it caused, and also now the internal things, the local things, the taxes, the levies that Kenyans have to pay, you know, to access, fuel at the pump. So how is this going to play out for the Kenyan economy, the rising energy prices as we go into Q2 and Q3, David?
For sure, it is going to have a negative impact, because I'm not sure how long the government would keep on subsidizing, because as much as the world remains unstable given Russia and Ukraine, so the supply chain factors on petroleum products will be affected. So basically it's going to rise, the cost is going to be high. Of course it will eat up into our economy, because petroleum has an effect to mostly all the other sectors of the economy, because even agriculture, you need to transport these inputs to where they belong, or to the farmers. Of course, all that comes with a cost. So basically it is going to increase and going to have a negative impact on the economy, but we hope these countries agree as fast as possible so that we can have a stable economy, because it's affecting any other country in this world. Then for the developing economies, of course, it is to hit hard, because we don't have buffer of revenue that we might be able to cushion that, and the economy is not stable as such to help us not to keep or sustain these subsidies. So of course it's going to have a negative impact until these two countries agree. Yes, and also the other aspect, we also have climatic change effect on the same. So basically those two aspects need to be addressed by the world, that we are able to control the world economy status. Yes.
Controlling the world economy status. Pauline?
Yeah. I just echo David's comments, because it's going to be tough. It's going to be tough with Russia being a superpower, obviously, you know, and the sanctions that also have been bestowed upon the country. Right now, I think they're struggling with the sanctions from Europe and the US, where they can't access actually 50% of their reserves of foreign currency. So that means even their trade is really affected. If you export something from Kenya to there, you might not get paid, you know, and we know Russia and Ukraine were one of our markets, our two of the countries that we export to. For them, they can also now import. So that means they will keep everything that they have. And remember, what do they have? They have fuel, they have gas, you know. So at the end of the day, we will have to feel it. As an emerging market country, we will feel it harder, as he said, because we are developing. We don't have the shock absorbers that other countries may have. So it's how then, when you know that, and as a country, how then do you ensure that you protect yourself? Yeah.
Very important to think about that.
Yeah.
Well, we are discussing Kenya's economy here with Pauline Mwangi, the director at Ronald's LLP, as well as David Kingo, who is an economic analyst. And we've been talking about the numbers of 2021, how the economy performed in 2021, the sectors that have been, or that were instrumental in driving that growth, including the education sector, hospitality, financial and insurance activities, manufacturing, transport and storage. Unfortunately, agriculture, the backbone of the economy, contracted to about 0.1%. And we have also talked about the 2022 economy, just where it is headed, considering the rising energy prices, the electioneering factor. And this conversation continues in just a little bit. You are watching KBC Channel 1. My name is Kiptum. Do stay tuned to BIZ Check. We take a quick break. We'll come back with more.